Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been extremely volatile, extremely difficult to trade, and we all are in the same boat. The price action has been super volatile, super difficult to trade, and due to the conflicting information with the economy strength and a lot of other catalysts, market freaked out last week with the ISM manufacturing PMI, as you can see, and the global manufacturing PMI being below 50. This was what sparked the volatility to the downside. The VIX increased to 64, I think, the highest in 4 years, and the third time it spiked in history that high. So basically, there was no shortage of drama in August because there was showing signs of exhaustion, the market following a strong rally, and now the Federal Reserve, we are all worried about the fact that perhaps it's falling behind the curve, fueled by some weak economic data, and also conflicted views on Japan's policy path that have exacerbated the volatility with the famous carry trade ricocheting across asset classes. So at the end of the week, the S&P 500 increased 0.5%, almost as the Nasdaq, but everything started last week. On Friday, we also got the unemployment rate that was freaking out a lot of people, 4.3%, and that was sparked even more selling off. So basically, on Monday, we got decent data, but no one cared. We plummeted 1,200 points. Tuesday, we tried to find a reason to find buyers to buy this market, and the absence of new catalysts and new economic data was basically doing the market, chopping the market, and trying to find some bottom. We found the bottom on Wednesday, not because the NBA 30 mortgage decreased to 6.55. It's because of earnings. Shopify, Disney, and a lot of retailers were showing a little bit more strength than expected. And I think that fueled the consensus and the change in sentiment. On Thursday, we got initial jobless claims. This sparked a nice move. Nice moves because we tanked on Monday and we put the double bottom and we try every day to climb the wall of worry towards this level, which we did at the end of the day. We are going to see that in the charts because this week has been really, really interesting and beautiful in terms of levels. As I was saying, initial jobless claims came lower than expected, and the 30-year mortgage rate 6.47 lower than the initial one for August, and the bond auction 4.3. And I think the interest was quite important in this bond action. So basically, yields were decreasing, we freaked out, and we have recovered. We freaked out so much that the market is no longer pricing the 50 basis points interest rate cut that was in here. We are now at 25 again with 51% probability. And then we have a jump on November, but I think this will slowly adjust to here. I don't think the Fed is going to cut 50 basis points because they already know what happens when 50 basis points is in mind of the market. Market just sells off. So adjusting yields, adjusting interest rate probabilities, we got a huge dip in the market. But this is the weekly candle. This is the weekly chart that everyone was watching. Pretty beautiful support for investors. For day traders, this week has been painful to trade because it was super volatile. really difficult to manage risk. And if we check the daily chart, we came from last week that I told you, the ISM, then the non-farm payrolls, and we started the week with this day in which we basically sold off 1,000 points. Then on Tuesday, we gapped up a little bit. Let's go to the 1 hour. We gapped up, we put that double bottom, and that was the low of the week. We tried to find some buyers until a technical setup. Let me just go to the NQ, this contract. A technical setup sparked a little bit of volatility to the downside again, shake out a bit, but this was a clean bias. This was a clean push to the upside on Friday into Thursday into Friday, and we closed the gap, and we are trying to reclaim some of this zone, but we are there. We are not super bullish, because on Friday basically we were chopping, and at the end of the week looks like Wall Street wanted to end it green and just activated the super rip into the power hour, and we stayed above 18,500, taking all the liquidity that I was watching, but I was not longer trading because I traded my setup. What I traded was during the overnight, we established this pre-market low, and during the London Open, we did this. Basically, we took this liquidity up here, and the liquidity that I was targeting, let me just change to a lower time frame. The liquidity from this zone on the Monday sell-off. So we took everything of this in the overnight on Friday. We chopped, and I was no longer, I was not going to buy this market here. You have to really understand how this market works. When we take liquidity and we are not ready and we consolidate, the first move down, it's usually weakness or another liquidity grab. The draw was either here or here. So we tapped this one, and then we continue lower. I was just watching, as you can see, if this fair value gap was respected, but wasn't respected. I was just prepared to take a trade in here. I didn't, because basically it didn't took my high of the candle. So I waited for, and this was a beautiful setup, liquidity from pre-market low, and then last week low down here that was tapped perfectly, and we got what we were looking for. The inverse fair value gap, the bullish fair value gap, not tapped here, tapped here, and then I took the same setup as always with 18 points of risk and targeting these relative equal highs up here in the overnight. I was not targeting this pre-market high, not this pivot. This week, I have been adjusting expectations, taking profits earlier because it's been super volatile. So I don't want to fight the market. I will just get what the market wants to give me. In this case, I just wanted to take these relative equal highs. And when this trade, I was zero drawdown, maybe 2 points. It bounces again in another. I could have added here, but I didn't. And I just got 110 points in a big push. The open gave me that to the tick almost. And then the chop started. So I was just not willing to trade this, and seeing the big push to the upside and seeing that the Nasdaq on the daily put a sustain This was quite sustained. It's not indecision for me, it's just equilibrium. I think next week we might see some kind of pullback and then try to reclaim some levels again and continue our move to the upside. Yields have adjusted, dollar has adjusted, yields have bounced to the key level. I mean, everyone is almost back to normal. The 2-year yield is at 4%, the 10-year yield is at 4%, a little bit below. The inverted yield curve is again pushing lower, but at the end of the day, I think it's going to uninvert. But until that happened in a sustained way, look at what VIX did. From the highs of 65 to basically 20. 68% decrease. That's a huge move on the, because that was the kind of extreme fear that everyone was watching to basically buy the dip. When everyone's greedy, you have to fear. When everyone's fear, you have to be greedy. That is what Warren Buffett says. And this is a good example of extreme volatility in the VIX that marked the bottom, at least for now, of the market this week. So levels for this week, or at least levels of interest. Let me just first clean this a little bit. What we took almost everything. So basically, I'm gonna remove this. Sure that I don't remove. Okay, so clean chart. I'm just framing what liquidity we took. This can be done. So with this liquidity taken and the bounce on the last week low, I think we are not going to test again these lows, nor the 12%. The 12%, let's go to the 1 hour. The 10% might happen because we have this 1 hour. That could be insane, right? Do you think we might do this? That would be a really big shakeout. But anything can happen, so I'm gonna leave this open. Actually have an alert here. I'm gonna leave this open, guys, because I think we have to be prepared for everything, and this is the last wall of support that I see. Be aware that we have a big volume node here, so this is a good consolidation. So I don't think we are going to the downside, but I want to be prepared. So my first setup would be to the upside, and I will just see what price action does at this level down here if we get there. So my first level is obviously 10%, and this range that we left behind. We have a lot of confluence here. We have the point of control up here. I mean, we have a lot of things, a lot of business to reclaim up here. This pivot on the blue line at 18,700 would be my first target. So I think we are going to slowly grind and grind and grind and grind and grind and grind until at least near to 19,000. Because remember that this is a void in volume, and I think we are going to go without any kind of resistance, maybe without any sellers, maybe without any buyers, because we are at highs of the week next week if we start doing this. But my first target would be this volume node here at 19,600, and then the 19,000 psychological level right below a zone of resistance. This pivot, it's quite important. Then we have the 10%. So let's go down to the 30-minute because looks like we have some kind of small fair value gap here that I got since Thursday last week, since the day of the big freak out on the data. So this, I'm going to maintain this. This has to move there. I don't know why I have it so bad. Okay, so this is it. It is what it is. We have a lot of liquidity here, and I think the biggest one is going to be this 30-minute that we got here. This is an inverse, so we have to adjust that inverse to orange. And let me just use the template 1 and 2, and then the midpoint. This is another level that I would like to see taken. I'm going to put the rectangle in that zone. So bear with me a bit. Text, extend right, red. So that's the first target. We have two liquidity zones. These are low resistance liquidity that are getting from here. These are wicks. And then we enter the inverse fair value gap. And this is pretty important because after that, we have the 10% and we enter the range again on the, we enter again the range of the previous range that we broke out, and we open 19,000. So it's going to be quite difficult, and we have to really adjust our expectations. This is going to get another pivot, then we have a 15-minute, but in the higher time frames, I wouldn't mind if this just go lower and then starts attacking this. So that would be the number one setup, because I would be a lot more confident if we take this zone with a little bit of manipulation, and then we clean these guys, we shake them out, and then we push higher. If we start grinding, I don't like grind days, and we up this, oh boy, I'm not going to long this. I will wait for some kind of pullback, perhaps a retest of last week high or things like that. But I would like to see the other setup. That would be setup number 2, and that would be a B setup. The other one, this one, that would be an A+ setup, because it takes a lot of liquidity and it creates a bounce in a fair value gap. That would be pretty good. So we went through dollar yields and how the sentiment has changed, the inverted yield curve. Let me just do a quick review of how this Magnificent Seven dealt with all this volatility. Apple, pretty good, right? Microsoft, pretty good, cleaning gaps, doing business. Doing business, right? Pretty good, Microsoft. Overall, we are seeing weakness, but in terms of this week, they have bounce of a pretty interesting level. Tesla, in the middle of a box. I'm not interested. Amazon is bouncing also, leaving a big gap that I'm going to watch, because Amazon is consumer discretionary XLY, and I want to see the retailer sentiment this week. If the retail sentiment is strong and we see that the economy is going to be supported by spending, that's good. Even though that goes against the fight on inflation, I don't think inflation is an issue anymore in the short term. We are worried about the economy. and we need support. Fed is going to support that on September with a 25 basis points, I'm quite sure, but we need more data with the consumer being strong also. So Amazon, top pick to watch this week to see if it enters this gap and continues climbing. Google AI play, nothing of interest right now. Nvidia bounced. It's been super choppy because it dropped to 91, and I think this zone was, I mean, look at this candle. Investors were dreaming with this level. Below golden pocket, and now reclaiming more than 100 points, sorry, more than 10 points. That's insane. So I'm going to remove the golden pocket. I'm going to adjust this here. We are in the middle upper part, but I want Nvidia to continue pushing this big candle. And as long as Nvidia and semiconductors continue climbing, was not good. This was almost cleaned. Oh, come on. So as long as semiconductors are strong, I think we can carry this market. So finally, Meta, it's been super strong. Look at this movement. Look at this move to the downside and then the reclaim. Why? Because Meta has a lot of ad revenue. It's going to report earnings. It's also an AI play with a new model, Llama. I mean, Meta, it's quite interesting and it's stronger than others. So look Meta and Amazon to find that strength in the market to really trade in the Nasdaq, because that would be pretty beautiful. And apart from that, XLF took a hit, but we are bouncing from support. We took the previous all-time highs. We are now trying to establish another all-time highs, but I don't think. First, we need to reclaim this pivot. This was a typical M, and then the drop. Everyone was watching how the banks were being destroyed, the economy, financials were being demolished, and also what was being demolished is small caps. Small caps were basically destroyed with the fact that even though the Fed was going to lower interest rates, recession means that all these small businesses are going bankrupt. So let me just continue moving this. This is getting more and more interesting. The RSP equal weighted is showing you how the overall economy it's behaving. And it freaked out. It freaked out a lot in all indicators. And we are now with a little bit of hope. So for now, small businesses are not out of the woods yet. We need to see more and more recovery. And that recovery will be on hands of the consumer discretionary, XLY, which needs to push higher, because basically the ratio between consumer discretionary and consumer staples was broken down to the downside. And this is a defensive move. Let me just adjust it here, and you will see how we were in this zone until we broke down pretty heavily. We are now at previous resistance is now support, but consumer discretionary took a big hit on the market. If we found out that Amazon, Tesla, Apple in a way, and Shopify and all these guys are pushed up on hopes that retails and consumers are still strong, and also we found that Nvidia is continuing its, for example, reclaiming this cross of the 20 and the 45 daily moving average. I think we might see some kind of pretty big recovery on the Nasdaq. In terms of dailies, I already covered the levels. I would like to see my preferred setup would be to just lower this a bit, take down, yes, adjust it better. Lower this, take down this liquidity, and then push towards with a fair value gap inside a fair value gap in here and take the buy side model to the upside. That would be my number one setup, the A+. And I think that's all from my side. As always, thank you for your time. If you found these weekly recaps useful, please give them a like, subscribe to the channel, because I upload these videos every Saturday for the weekend to review the economic side, the fundamental side, and also the price action and technical levels on the Nasdaq for the entire week. Remember that I also upload videos from Monday through Friday for market forecasts, market updates, and market recaps. I appreciate your time as always. I do these videos for me live. Right now, I've been watching the levels, watching the gaps, watching the imbalances. I'm analyzing this market with you and also for you, because I would like to spread my approach to the markets for you to learn. There's a lot of educational videos out there on YouTube. This is another one of them, but this is my style of trading. I consider this successful. I'm profitable, and the only thing that I would like to say is that I have 5 years, almost 6 years of experience, and I've never seen this kind of volatility apart from the pandemic or big things like that. The way this market sell off on a change of mind, on a snap like this, the freak out was extreme. But extreme volatility means opportunity. That's one of my mantras. Warren Buffett also says when everyone's greedy, start to fear. When everyone is fearing, when everyone has fear, starts to be greedy. And we found that bottom in the big 65. Now it's our opportunity to see new levels, to see how we climb a little bit more to reclaim the range that we got, the point of control, and then I think we will be in a very good position to just take a little bit of pullback, higher low, and then push with strength into September. August is going to be quite difficult. It all started on the 1st of August and it's going to continue. Lower liquidity, lower players, lower participants, extreme catalysts. I mean, it is what it is. But if you want to be in this world, you have to trade every single day, every single month of the year. So it is what it is. What you need is discipline, patience, and risk management. And that's what I'm trying to share, because I learned those and it was a game changer for me. So stay safe, everyone. Have a nice weekend. Rest a bit. Do your homework. Do your own analysis. Go around. Go outside. Take time with your family, with your friends. Enjoy yourself. And come back on Monday with a clear mind to take the opportunities that this market is going to give you. Stay safe, everyone, and see you on Monday.